Forex trading. Introduction to the module. The Forex market is at the center of the global economy. Whenever an investor wants to invest in a foreign country, a tourist wants to holiday abroad, or a consumer wants to consume a foreign-made good, a Forex transaction is needed. Yet the Forex market serves more than just the needs of these users. The market's depth, liquidity, and accessibility mean that it also offers ample speculative opportunities for those who wish to trade it. This module will explain what the Forex market is and how traders can seek to profit from it. What is Forex? Forex, or foreign exchange, as it is formally known, refers to the global trade in the world's currencies. It is arguably the largest and most important financial market in the world. This is because most international trade and investment also requires a currency transaction. Consider the following examples. A British tourist holidaying in France must convert pounds into euros, in other words, sell British pounds and buy euros. A Japanese retailer selling goods in the UK must convert foreign receipts, in other words, British pounds, back into Japanese yen. American investor buying shares in a German business must first sell US dollars and buy euros. A Swiss importer of Danish goods must convert Swiss francs into Danish krone to settle the invoice. Trade and investment flow between international partners who share the same currency, or where one party is willing to accept foreign currency, require no Forex transaction. The Forex market. Unlike the stock market, where financial transactions have historically been centralized at a physical stock exchange, the Forex market has always been decentralized. Currencies are traded between thousands of banks, in hundreds of countries, right around the clock. The value of daily transactions in this interbank market exceeds $5 trillion, which is more than that of the global stock markets combined. The consequence of this fierce competition is that the market is extremely liquid and transaction costs are typically low. Almost all national currencies are traded in the market. Most trade, however, is concentrated in just 6 currencies: US dollar, European euro, British pound, also referred to as sterling, Japanese yen, Swiss franc, Canadian dollar. The oldest actively traded currency pair is the British pound versus the US dollar, an exchange rate affectionately known as the cable. The nickname dated from the mid-1800s, when Great Britain and the US were the 2 largest economies in the world. The advent of the telegraph machine allowed currency transactions to be executed between London and New York via an underwater cable in the Atlantic Ocean. Forex transactions. A forex rate is the price of one currency expressed in terms of another. So, a forex transaction simply means exchanging one currency for another. Consider a forex rate for cable, the pound-dollar parity, of 1.25. This price means that £1 can be exchanged for $1.25. A trader can either sell £1 to buy $1.25 at that price, or sell $1.25 to buy £1. The forex rate is subject to change, depending on demand and supply. The value of the dollar might rise, for example, if US-bound trade and investment flow increase. In this case, the pound might fall, and the dollar rises, respectively. A pound might then only buy $1.15. Opportunities in Forex. The Forex market not only facilitates trade and investment in foreign assets, it is considered a class of asset itself. Consider the development in the cable exchange rate just described. Currency traders who anticipate a rise in the value of the dollar could exchange their pounds for dollars at 1.25. After the exchange rate falls, they could do the inverse transaction and rebuy the sterling. As they now only need to sell $1.15 to recover £1, they can pocket the difference as profit. Admittedly, this profit is only 10 cents. But, as forex transactions are typically in the millions or tens of millions of pounds, those 10 cents quickly add up. Trader sells £10 million at 1.25 and receives $12,500,000. Exchange rate falls to 1.15. Trader resells $12,500,000 and receives £10,869,565. Return on £10 million investment is $869,000.